This is a Momentum Media production.
Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Hello everyone, welcome back to a brand new episode of Property Showcase, brought to you by the Smart Property Investment Network, the inside track on the best insights in the business of buying and selling and managing investment properties. I'm Grace Ormsby, and it is an absolute pleasure to be joined in the studio today by the one and only Sam Gordon. Sam, how are you going?
Grace, very well, thank you. Great to be back.
It's nice to be in the studio. I don't think
100%.
we've done maybe ever.
I don't think we've
done a lot via Zoom, but we just said studio is the place to be.
Can't beat
it. So you are the owner and director of Australian Property Scout, as I'm sure all of our listeners know, because you are one of the most loved podcast guests on the Smart Property Investment Network. So welcome back.
Thank you. It's always a pleasure to be back on.
You were just in the studio with Phil Tarrant last week, I believe, for a new episode. And before we get into this, because I do feel like that's kind of good background intel for what we're going to be talking about today. So can you give us, everyone does need to go back and listen to that, but for those that haven't had the opportunity yet, a 1 or 2 sentence rundown on what you did talk about, what people need to know.
That's it. Well, we kind of ran through why is stock so tight right now in the Australian housing market, and really the reason why it's holding the market so steady as it is, and also putting a real, fire up a lot of other areas as well. So the opportunistic places to look for and whatnot as well. So it was good to kind of jump into that and smash it out with him.
There you go. So today we're kind of talking around the topic of how people can be taking advantage of that situation.
Yeah.
That low supply, low stock issue. Some people would be seeing it as an issue. Yeah. It's obviously an opportunity from your eyes. And people don't really come on the Property Showcase without having something cool, new in the works.
Yeah.
So we're going to get to that eventually. But talking all about, taking advantage of opportunities and where are you seeing some of those at the moment?
Yeah, so the big one, and this is what we discussed with Phil last week as well, really comes down to the areas that still have a lot of affordability in the tank. So almost the whole country is kind of going through the same sort of supply issue right across the country, but some areas are feeling the pinch because of the unaffordable because of where interest rates are. There's a lot of other areas where the interest rates aren't really affecting those local markets because they're so early and so low in their cycles, and the incomes are still really strong compared to house prices in those areas. So there's just a lot of opportunity. There's some really big, strong regional centers. You've still got some good, strong capital cities that are showing very strong growth potential from that perspective as well. So there's still plenty of opportunity out there. There's still plenty of markets worth buying in, that's for sure.
It's actually a great time to be talking about that because, most people that are interested in property do have some idea of that property clock.
Yes.
But I feel like we've been talking so much just about, that change in affordability that we're not really looking at those other factors at the moment. Yeah. So it's a good reminder.
Yeah, definitely. It definitely is. There's so many little facets and factors that drive a housing market, whether it's up or down or sideways or whatever. So I think it's really becoming a prudent time where you have to look at markets holistically, the whole thing, the whole picture. It's not just like it was in 2020, 21, where almost all markets went through a really decent run. You got to be smart about this and really be intelligent, because you go put your money into a market, you've only got enough for one property now, and you put it into a market that declines or goes sideways, it's going to be a very different result to putting in the correct market. It's going to keep climbing and keep producing for you.
Speaking of intelligence, do you have any of that you can be sharing with us today?
No, I'm not intelligent. No, so I think
true.
Look, I think in a market like this where stock is so tight, I think because we wanted to jump on and kind of dissect this, because when I spoke with Phil about it, we're kind of diving into the idea around off markets and really kind of honing in on that and getting a clear kind of picture of it, because so many people talk about it, and it's one of those things that's thrown around, topics that's thrown around, terms that's thrown around so much, especially from buyers agents. I myself am a product of being burnt by such a topic being thrown around that was like, yes, something was off market, but it didn't necessarily mean it was a good deal. So I really, the opportunities out there looking for is like learning markets really intimately and knowing those markets really, really well, and then getting access to the off markets. If you've got the ability to do it yourself, going down that avenue, otherwise working with, a good reputable BA that'll be able to help you get access to those deals and understand that market value, so you can really see where that value and that, profit you're making on the way into the deal from day one as well.
So if you know that off market is that way to go, where are the advantages, or where are the places that people should be looking at this point in time?
Like location-wise?
Yeah.
I'm not giving you that.
You're not giving me that anything. Fair enough.
Look,
Fair
I
enough.
think the big thing is like it's just looking for so all the areas that stack up, but then the affordability factor on top. There, the locations are going to keep growing, but it's getting access to the stock. That's a really big thing. But understanding the market value is crucial, because that's where we see so often people come in, they don't understand it. We kind of call them nufties. They kind of come in, they don't really understand it. They get access to it. They think, oh, it must be great. Everyone always talks about off markets, and sometimes they're paying $20,000, $30,000 over. We actually see it a lot, and kind of hence why we're doing this one as well, because we've kind of changed our offering and what we're doing a little. Because, traditionally at APS, we're always looking for, say, $20,000, $25,000 below market value as a minimum, even in the red hot markets is what we're always targeting for our clients, always making that margin on the way in. What kept burning us was the fact that we would, let's say a $400,000 deal, if we couldn't get it for $380 or less, it wasn't a deal for us. And then we'd see other BAs or other investors going out there and paying $410,000, $420,000 for the same deal. And we're like, that's setting the new market value precedence, but our comps were at $400,000, and that's where we could see value at. So what we started doing, we kind of implemented this change of this off-market surplus stock list that we started doing. So a deal that didn't quite meet our full deal criteria, it was clean and it was off-market, but it didn't have that discount that we're essentially known for. And we were kind of just blasting them out to the database and getting smashed off the back of it.
You've tapped an extra part of the market that you didn't really know existed before now.
Yeah. I think it's because I've always been so dead set on like everything needing a certain discount, or I won't produce it to a client. But, we're getting to this point where people were, these are people not on the books. They were looking themselves anyway. And then something like that comes through heaps better than what they were finding themselves. So they were just getting smashed and smashed and snapped up. So what we essentially did was we kind of brought the offering to the clients from the upfront rather than just sending it out to that end. So still have obviously, the trademark of what APS is known for, with the quality of deal being the size of the discount being that 20, 25, 30, depending on the market. But then obviously also in these red hot markets that people can't get access to themselves for stock, because stock is so tight, and getting access to deals is so hard. Still getting access to those deals, we're putting them through, but maybe instead of 20, maybe it's at 10. But instead of waiting maybe 8 weeks, they're doing them in 2 or 3 weeks. And they're just, people are lapping them up as well. So it's kind of a cool thing that we've kind of, I guess, changed and implemented. It was very hard for me because I've just got this criteria I always sat at. But it's really taken off and people are really loving it. And that fast turnaround, clean deals, off market, taking the heat out of the transaction, that's where people seem to really be loving it.
And it's obviously just got those advantages as well. And even though, as you said, it's not as big of a discount, people are probably saving that much in time that they don't care.
100%. That was the big thing. It's a time factor of like sitting there and waiting for maybe 2 months for a deal as opposed to 2, 3, 4 weeks, something like that. Getting in and getting those quicker. That was the big thing. We got a bit of a thing as well. They've got to be clean deals. We're not doing the renovators that we might do, as standard sort of trademark deals. But it was a cool thing, a little bit different. And the funny thing was, I was talking to Phil about it the other day. He's like, man, are people even still getting discounts? And I'm like, mate, come on. Even the 10K, a lot of people think in a market where stock is so tight, how are you even producing it? And that's why, we decided to still bring it to market, seeing what other people were paying.
I'd love to know, obviously you said it's people that are maybe not on your books that are going for this. Are you getting anyone though that has bought through you previously though that is going, I wasn't even thinking about, going for another property, but actually that one suits me perfectly? We
actually had clients that were had bought prior properties that got it on the email database and bought it off that. And they saw it. And that when that happened, that's when I was like, okay, I've missed this a little here. So when we started doing it and offering it differently, heaps of people that came back around, there was a lot of people where finance was becoming an issue. So with the interest rate increases, they were like,
true,
mate, I'd love this, but I can't wait 8 weeks at the moment. I know the discount's there. And I'm like, and that's where that sort of has come in, and being able to facilitate that faster for people has been a bit of a game changer for a lot of our guys there as well. So it's funny, you get all these people that you think would want that, and there's still a lot of people that no, I want the 2025 plus. That's what I really want. And they paid that little bit of a premium as a BA fee for that as well, and they wait essentially wait for that high quality deal. But these ones are still quality, everything's still great about them, just that little bit less, but they're paying that little bit less on the BA fee as well. It's certainly gone off.
It's really cool, just a tiered service. If you've diversified the offering, knowing that people are wanting or needing different things from that investment strategy. That's what really, it comes back to that investment strategy, doesn't it?
100%. Yeah. And the point you made before about that market moving so much in the same time frame, we don't do this in all markets. So we really are targeting the markets that are red hot, that other people, the average Joe can't get in and get a good deal in anyway. So you're kind of getting them into that. You're giving them the peace of mind that it's a high quality deal and that you know market value and they're not overpaying. A lot of people are worried about that at the moment because a lot of people are overpaying. So you're kind of taking that guesswork out of it, still providing a great deal, carrying them through the end. It's been cool. So
it's stressing me out actually just thinking about the fact that a red hot property market, obviously if people can't be waiting the 8 weeks, you're talking 6 week stints really in each of those markets.
Yeah. You mean from picking up earlier to further in? Yeah, 100%. Yeah. I know.
So things are running pretty quickly.
Yeah, definitely.
At Australian Property Scout at the moment.
Yeah, no, it's good. It's just that little bit different thing that like I know, like now looking back, I know a lot of people have kind of asked for it for a little bit. They trust us to trust the process and the way we operate with that, but it's just that slightly different sort of service. And that's why I was talking about it with Phil off air, like last week when we were talking about the main potty. He's like, mate, do another one, talk about it. Because he goes, that's mad. Like, it's because obviously there's a quality side that we always, maintain. That's the way we're putting through bad ones. They're still mad, but it's just that slightly different. So,
that's the thing too. They obviously were coming to you. They're being filtered through, and it's only that they're not hitting one final hurdle to make that list. But compared to looking on market for the average Joe, who has time for that?
I'll paint you a picture as well, right? So like what we kept seeing was like that example I gave before of the 380, we'd turn it down and we thought it was around 400 and they're going for 410 plus. We had like on market, this is the way the market's moving at the moment, right? In a couple of these super hot markets that we're in, there's deals that listed and they list them cheap because they know they're going to sell them strongly. But there's a few deals. There was a deal in particular that actually kind of made me really think about this as well. It was listed for 399 plus. We put in a 415K offer, which seems, we're paying overs, right? Paying over the list price, but true market value in our opinion was worth around about 440. So for us, like we could still see there was 25K in it. We had, maybe a tad to come up to still keep a nice discount in it within that. The deal ended up going for 468,000. Like in 2 days, it just went to online auction and just got smashed.
Yeah.
And so that was the thing of just like, the craziest part of it is like we had access to it off market, like for a lot less than the 468. Pass on it because we couldn't get it for the money that we wanted to, but we put the offer in so we could see where it ended up because we knew it wasn't going to get accepted where it was. But that's where it's just that sometimes they're moving so quick from that front that it allows our guys to kind of get in the door ahead of time and really beat that window as well and get access to what other people aren't getting. Because like I said, we literally had access to it off market before it even went. So that blew our mind and was like, we've got to change this. We've got to do something a bit different. So,
and I know it's something that you've talked about ever since you got into the business to begin with, that idea of going off market, but just to really hit home to people the validity and the usefulness of not waiting until something does go on market. Where do you see, I guess, the biggest positives in the work that you've been doing for quite a long time in getting in before anyone else can see something?
In terms of like the off-market deal before it goes through, it's taking the heat out of the transaction. So that's what it's all about. Everything about off-market, it's taking the heat out so you got time to assess the deal, really come up with your market value of where you can see comparable sales and where you can call market val, and then try and close it out of that at that suitable discount that comes in from that end as well. When it goes on market, you don't have that luxury. If we're talking the red hot market, you don't have that luxury of time and time. Yeah, it's essentially the time component and taking the heat out of the transaction. That's the biggest thing that we're always looking for within that. So yeah, it's been super powerful and it's been a great experience so far.
So a myriad of options really on the table now. Not only is it all these different locations that you're looking at.
That's what it is.
Exactly. You can eat as much as you want or as little as you want and as quickly as you want.
Yes.
Probably if it's hotter, you need to still eat it a little bit quicker slower. But we'll get rid of that analogy at the moment. But really, really cool stuff.
Yeah. Thank you.
And obviously a lot of people are already enjoying the buffet.
Yes.
Where can people go to if they want to find out more information about all of this?
Yeah, so if the guy, if listeners want to come through and have a chat, obviously they can jump on for a discovery call, www.australianpropertyscout.com.au. We're on all the socials as well at Australian Property Scout. And if anyone wants any, further, tips or tricks or listening to the way that we invest as well, we've got our own little potty, not the size of buddy SPI with your 10 million buddy downloads. We've got our own little one called the Scouting Australia podcast as well, if anyone wants to go have a listen to that too.
Before I do let you go,
yes,
I do want to say as well, obviously when people have that call with you, they can be not even sure what option to be going down when they talk to you. And they might not even know which one would be better for them.
Yeah. So like, how do we make the decision around that? It always comes down to the individual. People with a smaller budget, a lot of the time they actually fit into more of the trademark style of trying to get the bigger discount. But it depends if their budget allows them to get into one of the red hot markets. The cheaper fee, the cleaner deal, the speed of it could be a better option for them. But it always comes down to how much capital they've got. So if they've got enough to get into one of those, they can be a great option. But if they need the bigger discount and they've got a smaller budget and smaller capital, they're better off going for the essentially slightly dearer option with that and letting us get to work to get essentially what is APS's trademark, which is getting those biggest discounts and going for something like that. What we actually find is, as a little final touch point on it, a lot of the guys that want to build a big portfolio, I always would have thought that they wanted the trademarks and wanted to go for the biggest discounts possible. A lot of them just want to get their money into the market. So a lot of those guys are actually going, nah, man, let's get, 3-4 deals in the next 3-4 weeks, punch them all in and get our cash in the market working for us. So it's a funny thing, and it's always case by case status on that front as well. And it always comes down to how much capital they've got to inject, so we can really work it from there.
Comes back to that age-old adage, doesn't it, of time in the market rather than timing the market.
Yeah, 100%.
Sam, thank you so much for your time. As you mentioned, plenty of ways to get in touch.
Yes.
We've got them listed on the blurb for this podcast as well, so go check them out now. Thank you again.
Thanks, Grace. Absolute pleasure.
Looking forward to seeing what's next.
Sounds good.
To everyone who is listening along, we hope you have enjoyed this episode. If you have any questions, editor@smartpropertyinvestment.com.au.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.